Hi everyone, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday. It's May 28th, 2019, and we are now in the last hour of the trading day. As many of you know, my opinion is that the closing price is the most valid price of the day. Therefore, that is the price that I want to use for the most confirmation as far as entering my positions or getting out of my positions. So anyway, currently the Dow is down 89, the NASDAQ is down 6.8, and the S&P is down 11. We were green on the day across the board earlier in the day, but we have the market has gotten sold into as the day has gone on. So that's how it goes sometimes. So the plan for today, first of all, we're going to run the legal disclaimer. Then we're going to come back. We're going to take a look at my current positions, when I got in them, why I got in them, and how I'm going to manage the position going forward. Then we're going to take a look at my stock watch list, and we're going to go through each one. And we're going to take a look at the technicals, and we're going to see if there's anything interesting, if we have a setup for the end of the day. And then after the market closes, if you have any questions whatsoever, I'm happy to answer those. So that's the format for today, and I appreciate everybody coming out. And so what I'm going to do right now is going to run the legal disclaimer, and I will be back in about 40 seconds. So hang tight.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All righty, there we go. We got that out of the way. So, all right. Well, first of all, let's take a look and see what my current positions are doing, and see how to manage those going forward. All right, so DDM, I did buy DDM on Friday, the 24th of May, and the reason I bought it is we closed below and then we closed back above the 200-day moving average. Now this is a good back-tested approach where you stay in over the 200-day on a closing basis and you get out under the 200-day on a closing basis. So the key here is to limit your losses. Doesn't mean that every entry is going to be a positive trade, but it does let you have large wins if you're right and small losses if you're wrong. So today, if we close under this 200-day moving average, I will be getting out for a small loss. So we'll see what happens with the end of the day here, but currently it is under the 200, in which case I will have to get out. Etsy. I did buy Etsy on Friday. The reason I bought here is we had a close above the 20-day moving average, the 5-day, and the 10-day moving average, and we also had two higher lows behind the trade. As you can see, it did move up nicely earlier in the day. We did hit one profit target up here, which I'm thankful for, but like everything else, it got sold into. So moving forward, if it continues to move up, I will continue to stay in the position and to continue to scale. As far as where I will get out of this trade, if it moves against us, probably a close below all three of these moving averages, the 5, the 20, and the 10. So it is up today. It is showing some relative strength compared to the rest of the market, which is good. So going forward, if it continues to move up, I will continue to scale. If it closes below these moving averages here, I will go ahead and just take a loss. But again, I did scale out of 10% here. That's the beauty of scaling out. Even though it reversed, we still got something very, very near the high that pays for lots and lots of commissions going forward. And as I've mentioned, your commission expense at the end of the year can literally be responsible for 20% of your profit. So, let's say you made $10,000 in profits. Your trading expenses, your commission can add up to approximately $2,000, so 20% of that. So that's why the scaling method that I use, I'm so fond of, because it literally will cover that for the year. So, okay, IBB. I did buy IBB back here on the 21st of May. The reason I bought it, we had this beautiful V2. We had day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1. That makes it the legitimate V2 entry. We also closed above the 10-day moving average. Oh, just give me 1 second. All right. We closed above the 10-day moving average, which is another positive sign. Moving forward, my initial stop on this was the halfway mark of the washout bar, day 2 of the V2. If we close below there, that will be my signal that I am wrong on the trade. We did, I believe, scale out of one profit target on Friday, which gave us, a piece of profit that we never would have had. And again, helped to pay for the commissions and so forth. So I believe I got out of about 20%, if I'm correct. I think I am. Have a lot of trades. Sometimes it's hard to know them just right off the bat. The other thing I liked is that we have this low. This low is lower than here, but we have this positive MACD divergence. These bars are more shallow than these bars. This is a double bottom with a bullish divergence. So after this happens, a lot of times that first rally gets sold into, which it did, came down, made a higher low with the V2. So a lot of the sellers in the equation are gone. These people that bought down here, sold up here, these people are now out of the equation. So going forward, if it continues to move up, I will continue to scale. If we close below this line here, the 102.70, which is halfway of this washout bar, I will exit the trade. But again, taking a 20% profit off the table on the way up really helps your numbers. So, all right, boy, this is an interesting one. I bought silver here on the 20th of May when we went under the 30 RSI and then closed back above it. I did take a half position because it's under the 200-day. You can see the next 3 days it did move up our way. I did scale out of about 60%, 66% of this position on the way up, and I take a higher percentage of my profits off when I'm in a downtrend because of this exact reason. A lot of times you get these lower lows, you do get a bounce, you do get a snapback, but then they fail. So, but the nice thing is, by the time we got up here, I was out of 66% of my position. So even though we're down today, I would say that it is very close to a break-even trade, if not positive. I'll have to check my numbers, but what to do with it today, that's the case. We really got dumped on today on a lot of volume. My gut is, it's a 31.95 RSI, so it's still holding the 30 RSI. So you could make a case that you would hold it unless it closes under 30. What I don't like about it is we did go under the third ATR channel here, and this has been resistant. So my plan with this going forward is if we close back into the above the third ATR channel, I will hold that 33% because it will have gone under the third ATR channel and then gone back above and closed above, and we're still holding the 30 RSI. But if it closes under the third ATR channel, I will just go ahead and call that a scratch trade. All right, let me go over here real quick. This is my SPY trade. For those of you who may be new, just so you understand what I'm doing with this, I do buy the S&P 500, the SPY, each day at the close, and I sell it first thing in the morning. And the reason I do this is based upon this study. So since 1993, if you would have bought the SPY on the open and sold on the close each day, so if you would have bought it in the morning, sold in the afternoon, you would have actually had a 5.2% negative return since 1993. But if you did the opposite and you bought on the close and then you sold on the open the next day, you would have returned 568%, meaning that more than all performance came in after hours trading. So pretty significant that over time you can see a lot, most of, actually more than all of the gains in the S&P 500 have come from overnight trading. And the green line here, these are the results of buying in the afternoon, selling in the morning. The red line here, those are the results of buying in the morning, selling in the afternoon. And you can see it's not even close. It's a striking difference. Now, just because this has worked in the long term does not mean that it has periods of drawdowns that can be quite painful. So you have to look at this as a long-term approach, which I am. So currently I have been using this now for a couple months, and even though I have had a drawdown in the last 10, 11 trading days, I'm still net positive on the using this approach. And you can see Friday I did buy it here at 282.93, and I did exit this morning for a small profit at 283.10. But good thing I sold it in the morning, right? Because we have really fallen off a cliff since then. So I will be buying this again at the end of the day. All right, let me take a look here. Hey, Mount Doji, how you doing? I had a good weekend. Did some stock studying, chart studying like I do every day. How about you? All right. Hey, we got 9 people on today. That's great. Thanks everybody for coming by. All right. So let's start with my watch list, and we'll see if there are any potential setups for this afternoon. All right, so Apple, I did buy Apple here when we closed above the 100-day moving average, did move my way, then it closed below the 100-day moving average. So in order for me to get back interested in Apple, and I think we're getting into a range where it's definitely becoming interesting, I would need either one or two things to happen. One, I would need to close below 30. I'd need it to go down with the RSI closing under 30 and then close back above. That would be my first approach. The second approach would be closing back above the 100-day moving average and the third ATR channel. See how these have come right together? They've come head to head. That means there's a lot of support or a lot of resistance right here. If we can break back over the 100-day moving average, I will go ahead and enter Apple as well. So two approaches here. One, we close under 30, it gets rejected, close back above 30. That would be my first entry. My second entry would be a close back above the 100-day moving average and the third ATR channel, because if we can close back above there, that would give me good risk to reward ratio. It would give me some solid support underneath me. And that's really all that trading is getting yourself in a position where there is support underneath you, whether it's a previous range or moving averages or other things lining up, RSI. And then if you're wrong on a closing basis, close below, just get out for a small loss. If you're right, have the guts to hold it while it's moving upwards, which can be just as tough, if not tougher, than getting out when you're supposed to through the downside. So that's my approach on Apple. Close back above the 100-day or the third ATR channel, and or closing below 30 on the RSI and closing back above. So it doesn't look like anything today. Amazon is up today. We did break the 50-day moving average with force and volume. We have moved up. In order for me to get interested in Amazon here, I literally would have to have it close back above the 50. That would be the first step. Boeing, I would be interested in Boeing if we could close above the 100 or the 200-day moving average, which is the black line. Not only would we have a close below the 200 and a close back above, which would give me a good risk to reward ratio and give me the 200-day moving average below me, we would also trigger this fractal back here. Actually, this fractal was triggered on Friday, but the reason I didn't take it is because we did not close above the 200-day as well. So MACD is positive, which is positive. So we need to close back above this 200-day and this range, and that might give us a move up. Maybe it might, right? But it's a start. So as of right now today, nothing on Boeing. Alibaba, boy, once it lost that 200, it really lost that 200. So currently we're under a 30 RSI, 2739. So, somebody wanted to take a stab at Alibaba, the first step would be to have a close back above 30. So nothing there today. Caterpillar, has found a bit of a bottom here. We were moving down strong. Now we're moving sideways. Again, a close under the 30 RSI would be interesting. Right now it's a 32.52. So I wouldn't buy this unless we had a close under the 30 RSI and a close back above the 30 RSI. Canopy Growth did have a nice day earlier today, but it's given back most of its gains, unfortunately. Let me take a look here. Oh, you couldn't see the RSI over here. My apologies. So yeah, nothing on Canopy Growth here. I would need to break back above all these moving averages. If we got back up here in the next day or in the coming weeks, that might be a decent spot to get in. Cisco, we did gap up here on earnings. We have held that gap, which is definitely positive, but we're under all the moving averages. In order for me to get interested here, I'd have to have a close back above all the moving averages or a close back below the gap and then back over. So nothing interesting on Cisco. DDM, we have this close under the 100-day moving average. That's my line in the sand. I'll be getting out there. Diamond, which is also the Dow. Nothing interesting there. Walt Disney, I did mark this. I do like that, even though the market has gone down over the last 5 weeks, the relative strength of Disney has been good. We've been moving sidewards. I would consider getting into Walt Disney if we were able to close, like today, at one point, intraday, it was above all the moving averages. But if it were to close above all those moving averages, I certainly would consider that showing that it does have a little strength. Because like I said, this has moved sideways. This has been much, much stronger than the market. And so I like to keep an eye out for that when a stock is much stronger than the market in general. And Disney has been. Hasn't gone up, but it hasn't gone down that much. So if we were to close above all these moving averages here, I would consider it. So we'll watch that till the end. Etsy, again, we bought this on Friday. We did hit one profit target here. My stop would be a close below all these major this clump of moving averages. Facebook, having trouble with that 20-day moving average. That's the blue downward sloping line. Five Below was pretty strong earlier in the day. At one point we did break out above the 20-day moving average and above this range. Currently it's underneath it. I might consider buying this if we were to close back above the 20-day, which is the blue line here on the top of this range. So on the other hand, we're bumping up against the 50 RSI. It's 48.72 at the moment. and MACD is not positive. So, it's a little iffy. Let's see where it ends up. I'm not sure we're going to be able to buy anything today. Gold, I'm waiting for the 5-day EMA to cross over the 20-day EMA. That is a valid back-tested approach, profitable approach for gold. But I will be taking that, but we have to have the 5 close back above the 20-day moving average on a closing basis. All right, Google. Well, being in Google when it's above the 200-day and then getting out is also a positive back-tested approach. I don't like that we were up so high today and then we gave it all back, because now we're not respecting the 200-day anymore. We're above, we're below, we're above, we're below, we're above. So it's kind of lost its power as a moving average. So, another approach for Google is a moving average crossover system where you get the 10-day moving average when it closes back above the 30-day moving average. And the pink is the 10 and the blue is the 30. So we'll see what happens with the 200-day. I would like to see a close below and a strong, clean break above the 200-day. That would make me feel a little bit better about it. But barring that, waiting for the 10-day to close back above the 30-day would be another approach that would kind of keep you out of this noise, because when a 200-day breaks and then closes back above, it should hold. But if it's above, below, above, below, above, then it's lost its power as support. So nothing on Google. Goldman Sachs, low RSI, it's 35 RSI. Looks like it's holding the third ATR channel, but that is not enough by itself. So nothing on Goldman Sachs. IBB, again, we bought this back on the 21st. It's moved around. My initial stop here is the 102.70, which is halfway of the washout bar. Big picture, I really do like this setup, again, because we have a double bottom, we have a bullish divergence. It did move up, it got sold into, it was strong enough to move back up with the nice V2. Now it's kind of stuck inside this range. MACD is positive, so close below 102.70 will be my initial stop, and we did hit one profit target. Intel. This bar here on the 23rd of May was interesting because we closed back above the 30 RSI, I believe, and we closed back above the 30 ATR channel. Today, it has given that back. We're back under the 30 RSI, and we're back under the 30 ATR channel. So nothing there. I do have an eye out for Intel. I just, if I can find a really nice, strong move, that might give us an idea that we've made a short-term bottom, but we don't have that today. Mount Doji says, I was with a ton of family this weekend, hope to get back to the grind. Yep, me too. Me too. QQQ likes that 178 support. Okay, let's take a look. Yeah, it's definitely been hanging down here, doesn't it? It's been hanging down in this range. Have a feeling we're either going to break to the downside or we're going to move up. How's that for a bold prediction? Okay, where were we? Johnny, how's it going? Your show was a nice calm voice in the all too common YouTube stock market noise. Well, that's good. I haven't watched many other shows or live trading rooms or anything like this, so I don't know how mine's different. I really don't. So, but I'm glad to hear that. Thanks for letting me know, Johnny. Ramble Ron, hey bud, how you doing? How's everyone? I think everyone's good. Nice to see you, Ron. Hey, Ron, you had AMD, right? On your options? Look at this, everybody. I'm pretty sure that was Ron that had those. Look at this huge move today. Isn't that something? Isn't that something? I think Ron had some options on that. All right, let's get back to business. Where were we? Google, Goldman Sachs, Intel. Yeah. All right. The Russell would need to close below the 30 and close back above, or a close back above the 200-day, and or a 1050 SMA moving average crossover. But we're not close on any front there. Coca-Cola has been moving up nicely. It's been strong. A lot of money is going into the defensive parts of the market, and Coca-Cola would certainly be a defensive play. We are down a little bit today, but really no damage done to the chart per se, other than we broke out above this previous high, and now looks like we might close back below, but it's still holding the 50 RSI. Lockheed Martin. Good, Ron. Glad for you, buddy. Nice. Lockheed Martin, nothing really. MasterCard, nothing really going on there, although it is up on the day. Merck, you can see these last 2 days, Merck has tested this area up here twice, and now this is the 1 ATR channel, here's the 2 ATR channel, closed below, tried it again today, closed below. So, excuse me, so nothing on Merck. If we came back into this area, I might be interested. Microsoft. Well, it's doing okay. It is up on the day, which is positive, moving sidewards. But really nothing, no signals to get me into Microsoft. Netflix has been testing this 100-day here, although we were below it, above it, below it, above it. So it's respecting it, but it's not respecting it. To really respect it means that it should, close below and then close back above and stay there. I think on Netflix, my interest would be close above the 50-day moving average and close above the 50 RSI at the very least, but nothing today. Nike lost that 100-day and now it's starting to pull away. For me to get interested in Nike, I think it closed back down under the 200-day here, and then it closed back above in conjunction with a low RSI reading would be a good dip buying area. But right now, we're not quite there. Philip Morris, we did have Philip Morris. I got out of Philip Morris here on Friday. And, this is a good example, everyone, of respecting your stops and your plan. My plan was to get out when it closed under these moving averages, and I did. I didn't like it. I don't like to, I don't like to be wrong, just like everyone else. And there's that part of you that thinks, maybe give it one more day. I've been doing this so long now, almost 24 years, that to me, this is more the norm than it immediately running back up. So, imagine the world of hurt we would have been in if I would have just hoped and give it one more day. It's only down 3.8%. So just a good example of why you should get out when you're supposed to get out. Did bounce off the 200-day, which is nice, was at almost a 30 RSI. So those are two decent signals here. What I don't like, though, is I don't like this major skyscraper, this major candle on the way down. When you have these big major bars, it's tough to get back up. You might have a rally for a day or two to get to these halfway bars, but in general, I just don't like getting in front of or taking a trade when there's a huge big bar larger than 1 ATR in the recent history. So, this could be tempting using the 100-day, but I'm just going to let it go. PayPal was, it is actually, it's up 1.61%. It was up a lot more earlier in the day. but there's really nothing here for me to take a look at. The Qs, 178.84. I will be interested in buying the Qs if we can get down into this 33 RSI at the same time we're at the 200-day moving average. That would be an excellent risk to reward. So let's just be patient. Let's see if it'll get down there, and if it does, doesn't mean it's going to be a positive trade, but it means it's going to be an excellent potential buy area when you have a 30 RSI support and a 200-day support as well. Silver, we talked about that. We did phase out at 66%, and we got whopped up on here on our remaining 30-something%. If it closes above the 30 TR channel, I may consider keeping it. Otherwise, I'll let it go. SPY, we talked about that. I will be buying this at the end of the day. You know, this is a tough one because today we did trigger a fractal. A fractal is where you have a high point with two lower highs to the left, two lower highs to the right. It did trigger it. We have a positive MACD. We did have a lower low here, which is one thing I don't like. We're at a 45 RSI. Let's look at the weekly chart on here. So nothing too great on the weekly, really no support underneath us. Yeah, I did mark it. Let's just see what happens at the end of the day. There's something that, you know, I do like that it's up today. So the relative strength is quite high. It's under the 200-day, so I certainly would be taking a half position if I do take it. So let's just see what happens. AT&T, as you know, we did buy this here and rode it up to here. That was a really nice trade. Hasn't really done much since we've gotten out. TLT, see, this is the concerning thing, everyone. I mean, you know, obviously TLT, these are bonds, 20-year bonds, and you know, bonds typically tend to go up when people are scared and they're looking for safe assets. And we're having a major day here. I mean, look at this rally. I mean, basically money moving into bonds takes money out of stocks, and that's what we're seeing, right? Bonds market has been going up while the stock market's been going down. So this, you know, it's getting pretty close up here to the 6 ATR channel, where that is where a lot of stocks and ETFs, that's about as far as they'll go. Not all the time, but a lot of the time it's about as far as they go. So, you know, this is getting to be a bit of a mania here at this point. So I'm not going to buy anything there, but I think it's important that we watch bonds. If we see bonds coming off, that might be a good sign for the market, as money is selling out of bonds and probably going back into the market. But this is very strong, and this is concerning. So let's, as always, let's be really careful. You know, let's be conservative. Let's try to stay in the trading game. Let's try to do trading for years and years and years. And when you're starting off, the only way that you can stay in the game is by taking small position sizes. If you start off, you don't know what you're doing, you take a huge position and you get walloped, then you're out of the game. And how are you ever going to become a good trader if you don't get the experience? It'd be like trying to become a good guitar player and somebody taking your guitar. Kind of tough, right? So in order to be a good trader, you have to have experience. In order to have experience, you have to do it for a long time. And in order to do it for a long time, you have to stay in the game and not get wiped out. So you've heard me say that before, but it's really true, everyone. Tesla starting to find a little bit of a bottom there, but it's a 22 RSI, so nothing interesting there. Natural gas has moved down, it's just moving sideways, nothing there. Oil up a little bit, but not much. Visa, if you remember, we did short Visa. Where did we short Visa? Shorted Visa up in here about a week ago. We did cover down here, and the reason we covered is because it went under the 50 RSI and then went back above the 50 RSI. So we did cover our short here, and as you can see, that was a good place to cover the short. All right, let's take a look here. The VIX is starting to rear its head to the upside. It's above a 50 RSI. It now moved above all the major moving average, or not all the majors, but it did about this clump of moving averages here. So it's not a great sign. It's not a great sign because the VIX goes inverse generally of the S&P. So yeah, it looks like the market is now making new lows on the day. Verizon, we did buy Verizon here and we rode it up to here. That was another great trade. It's kind of moved sideways since we've sold it. Energy is at a 70.31 RSI. You know, if this closed under 30 and back over 30, it might be of interest. Real estate was up earlier in the day and has moved down strongly. And healthcare also tested the 200-day and moved back strongly. Okay, so this weekend, I don't know if you saw, but I did a video that I uploaded on Saturday night. And so, you know, during the live stream, I really only have enough time to go through my current watch list, the one that we do every day, make my trades, try to explain the charts. But, you know, there are times when people ask me, did you see this stock or did you see that stock? And I'll say, no, I didn't see it. And then I look at it and I go, oh man, that was a perfect setup. I wish I would have seen that. So what I'm going to do is every Saturday, or most Saturdays, I'm going to do a weekend video where I go through each stock in the S&P 100 and break it down like we do here during the live stream. And then the ones that look like they qualify, I'll put those in a separate watch list, an addendum watch list, and then we can, during the regular trading week, we can take a look. So this is the list that I was able to come up with. And, you know, if you want to find out the reason why I put these in the list, you know, it's on my channel under weekend analysis of the S&P 100, I believe. But just real quickly, I was looking for an all-state close above this fractal. That doesn't look like it's happening today. BlackRock, I'm looking for a close under the 200 and back above. So, you know, that might be a potential. I don't think for today, but in the coming days. Charter Communications, I was looking for a close above the 5 and the 10-day moving average. Doesn't, as it is right here, I don't like it. ConocoPhillips is interesting. Look at this. See this double bottom? See the bottom? The rally. Now we make a lower low than this low. But do you see how shallow the red bars are compared to here? That's a big time double bottom with the bullish divergence. So does it mean I'm going to just buy here? Probably not. What I really like to see is I'd like to see this move up, have some sellers sell into it at the 50 RSI, drive it back down, get a V1, V2, and then that would be my signal. Similar to IBB, where we have the bottom, the rally, the bottom, the move up to the 50, the move back down, then the entry with the V1, V2. So that's what I'm looking for on ConocoPhillips. So nothing today. Home Depot had a good day, but boy, it's failed. IBM, we'd have to have close back above the 200. JP Morgan, looks like it may lose the 50-day moving average here. Kinder Morgan, you know, we had this nice move up. I was looking for some sideways action and then a stab down and reversal. This is a big bar, so this concerns me, so nothing there. Medtronic, I do like Medtronic. We moved strongly above the 200-day moving average. We moved above this prior fractal over here. I'd like to see some kind of test. It was too high to buy up here, but I want to see some kind of test of the 200-day moving average, and that would get me interested in Medtronic, because my opinion is this big strong move up on the big volume here, it feels to me like something has changed, like we might be in an up move, but of course I want to get the entry as close as possible to 200-day. Oracle. Well, we are knocking on the door of the 100-day moving average with the 34.64 RSI. If in the coming days we can close below the 100, close back above, or close under the 30, back above, I feel like kind of in this area might be a good entry. So we'll see. PepsiCo, I was, nice upward move. We're now back into value. I don't like this big bar. I'd like to see it move sideways for a while and then get a V1, V2 entry. Pfizer, it's fairly strong. You can see it's actually up today. I'm looking for a close under or a intraday test of the 200-day. Procter & Gamble kind of puked today, didn't it? Again, if we could move sideways for a few days, go under, back over the 50-day moving average, that might be a good dip buy. Boy, I think the market's just fallen off a cliff. Yeah, 200 points down now on the Dow. Qualcomm. One second, please. All right, so Qualcomm, it is getting interesting. We had all this support back here. They had some news. Huge, strong day. Up. Came all the way back down. We're currently at a 30.32 RSI. If we could close under 30, back over 30, I would buy this. And also if we could go under the 200 or test the 200 intraday. Actually, you've got the 200 here, you've got the 100, and you've got the 250. So there should be some support here. I'd like to see it test it and reverse, and I think that would be a good entry point. But where it's at right now, I think it's just a touch early. Raytheon, I was looking for a close back above this previous high here. Starbucks, I was looking for a close under the 50 and close back above, so looks like we may have that in the coming days. Union Pacific, looking for a higher low close under the 50, back above, so nothing there yet. And US Bancorp, I was looking for a close under the 200 and back above. So currently, we do not have much. Boeing does not look like it's going to make it. Walt Disney does not look like it's going to make it either. Five below, no. The only potential there is Square because we close back, we trigger this fractal and MACD is positive and it's up on the day, which is pretty amazing. So the only thing that I really see here today, and I'm not even 100% sure on Square, I'll have to see where it closes. I wish I was an AMD. I saw the announcement over the weekend, had a feeling it would pop off. Yes, it certainly did. Good for you, Ron. That is awesome, especially on a day like today. This is a nasty day. All right, so let's take a look. Current positions and see what we're going to have to do at the end of the day. Obviously, we're going to have to get out of DDM. Etsy actually did go negative. That's a bummer. I'm going to stay in this as long as we stay above all these major moving averages. IBB, it might be there. It might, if it closes below this here, I'm going to have to get out. Silver does look like it is closing back above the third ATR channel. And SPY, whew, boy, am I glad we sold that at the end of the, or at the beginning of the day, right? And actually made a profit on that. So I'll be buying that at the end of the day. Take a look over here. Yep, Dow's down 204, Nasdaq's down 32, and the S&P is down 23.35. Hey, Dr. Jorgensen, how you doing? Tough day, Trumpy was gone. Yeah, he's out of the country, I believe, isn't he? Let me take a look real quick. All right. Hey, if I was talking about the video I did over the weekend about going through each stock in the S&P 100, if you're interested, there's a link for you that I just put in the chat. All right. So how's everybody doing with their trading? We've been down now 5 weeks, I believe, to the downside. Not huge down, but we've had down weeks, almost 5 weeks in a row. I haven't done actually that bad considering. Actually, last week after I did my numbers, I actually did have a positive week, which I was grateful for. I've mitigated a lot of the losses on the downside. So I've definitely outperformed the market on the downside, although, net over the last few weeks, it's been slightly down, but pretty good considering the market. So yeah, we need a little bit of an up move on the market here to get everybody's spirits up a little bit, but we don't know what's coming, right? And if the market keeps going down and there's no entries, let's just not take them. A penny saved is a penny earned. And if we saw the market go down 2-3%, we were very light in our positions. That's good. It gives us better setups when the market does turn around. Johnny says, I'm ready to become an investor interested in BND and VNQ. In the bond market. Yeah, well, the bond market seems like it's about the only thing that's going up. Well, let's just say I'm glad it's paper. Yep, you're right. I'm glad it's paper for you too, Ron. Although I wish the AMD was not paper. I wish that was a real trade for you. All right, so we've got about 13 minutes. Yeah, so DDM we're going to be getting out of. Etsy did go negative. I'm really glad I sold that partial position up there at the very top. IBB, we're going to have to watch that under 102.70. Then S&P, we're going to be buying that again. Let's take a look at Boeing. Yep. It's just been a really heavy market. Everything's been getting sold into. Which is, it's not a good of a sign. It seems like a real heavy market. It just feels heavy. It just feels like it can't go up. And so, a lot of times in these kind of markets, buying breakouts is they don't really work out. In these kind of markets, in my experience, buying the dips, buying the low 30 RSI readings, in these kind of markets, those are the kind of the trades that have a better chance than buying the breakouts. Dr. Jorgensen says sometimes flat is a really good trade. That's right. When I studied with Dr. Alexander Elder, he told me, he said, Greg, I really want you to listen and understand what I'm going to tell you. He says there's 3 kind of positions. There's long, there's short, and there's flat. And he said, being flat is a position, and it's just as valid as a long position or as a short position. So he told me, he said, really understand that. And sometimes it's correct to be long, sometimes it's correct to be short, and sometimes it's correct to be flat. And just because you don't have a position doesn't mean you're not working or doing a good job with trading. Sometimes being flat is the correct position. Yeah, well, utilities are going to be up also, Dr. Jorgensen. Trying to think of a good utility company right off the top of my head. Can you guys think of one? What do we have? We have about 10 minutes. Let's take a look and see. Looking here for, all right. Yeah, here, this is interesting, isn't it? This is the utility sector, Bruce. This is the ETF for the utilities. Look at that day to day. Boy, that's interesting, isn't it? It was moving with bonds, but now this is really puked up today. Interesting. You know, kind of an interesting thing here is, you know, here we had this previous high. This was the resistance. We finally broke out to the resistance. Now that resistance, look where it came down to, almost to the penny. Almost to the penny. So what used to be previous resistance now becomes support. Interesting, huh? Hey, William, how you doing? Thanks for coming by. Appreciate it. VPU. Yeah. So the Vanguard utility and the other one we just looked at, pretty much the same. All right. So we have about 9 minutes. Boeing, no. Walt Disney, no. 5 was looking promising today, but you know, I was interested in buying that over the 20-day moving average in that previous range, but it is giving it all back. It's been a crazy day. We could have a rally here at the end of the day. I don't know. And Square, you know, it did take out that fractal. MACD is positive. Problem is we rejected the 20-day, and problem is we have not tested the 50-day. So as much as I am tempted to buy this, I'm not going to do it. I'm really torn, actually. I do like the fractal. I do like the MACD being positive. I like the strength of the day. I like seeing it up on a down day in the market. But on the other hand, we have a negative downward sloping 20-day moving average. We rejected it heartily today, and we have not tested the 50 RSI. So, so the Dow's down 198 at the moment. Let's take a look back at the Qs. Yeah, I'd like to see the Qs get in this area right here when we have a low 30 RSI and a 200-day moving average. Apple. SLV looks like it's going to hold there, so I will close that. VIX went roaring up. Take a look here. V1 went below yesterday's low, now reversed back up. Pretty strong volume. Yeah. Oh, thanks, Bruce. I will have a good hike. I think Bruce is going to golf. Yeah, what a stinker of a day, huh? I'll tell you, this has been tough trading, everyone. This has been really tough trading. But you know, when you have tough trading and when you have drawdowns, it's just part of the game. And you know, if you can learn something from the loss, then it makes the loss not as bad, right? And what do you learn? You learn to be patient, not get frustrated, not take a stab at a trade that you shouldn't be taking. You keep your position size small, so that even if you do have down days, It really doesn't affect you. That's the key. And again, you have to be in it for the long term. So I can't remember who it was in Market Wizards that says, my goal in taking a position size is not caring at all about whether that thing goes up or down. He says, when you really don't care, then you have the proper position size. But if you're worried about it, you're waking up, you're thinking about it, your nervous system is telling you that your position size is too large. All right, so we got 5 minutes. I guess I better start cleaning house here. DDM, IBB looks like it's going to be okay. Etsy went back positive. That's good. Looks like silver, that 33% left. I'm going to keep it as long as it holds above this 30 TR and the 30 RSI. And the SPY will be buying that also. And then Boeing, that's a no. Walt Disney is a no. Five Below is a no. And Square, I'm gonna have to let it go. A good back-tested system on Square is the 520 EMA cross. So the 5 is this turquoise line, and this blue line here is the 20. So a cross there would be interesting. So, all right, I'm gonna let that one go. Dang it. All right, so we've got 4 minutes. I'm going to go ahead. I'm going to get rid of the DDM.
Order filled.
All right, so that DDM is gone. This DDM is gone.
Order partially filled.
All right.
Order filled.
Etsy, we're good. IBB, we're good as long as it holds that level there. SLV, I am going to be keeping that. Like I said, I phased out 66% up here. I mean, I show you guys this over and over, but the reason I point out those profit targets is the phase out targets, they're so important, because if it does puke against you, you're so glad to be out, of a nice percentage in the profit. So it looks like I will be holding that. And then SPY, gonna have to buy SPY here at the end of the day. So I'm gonna go ahead, I'm gonna buy SPY right now.
Order filled.
All right.
Order partially filled.
All right, so we're out of DDM. We did get our SPY. We are keeping Etsy. IBB could be potentially closing, but I think we're okay. I do have some options that I sold. I sold options on Apple. I sold puts down to here for Friday. And then the Qs, I also sold puts down here to 171 by Friday. So on the Qs, if the Qs stay above this line by Friday, I'll get to keep all the weekly I lost the word there. Premium. And then on Apple, if it stays above here, I'll keep all the weekly premium. If not, I'll be responsible to buy it down here, but I don't mind buying it down there. So that's why I really like selling options. It can be dangerous. You really have to use your technical analysis to look at, but my main focus every time I sell a put is, do I really want to own the stock down there? Do I really want to own that ETF down there? And I wait for setups where there's a confluence of signals, and that's where I sell my puts. All right, so we are at a DDM. Oh boy, IBB is going to be close, and I don't have enough time, but it looks like it's going to hold.
Order cancelled.
Ooh, look at that.
Order cancelled.
All right, so it's still valid. All right, so anyway, let's get to some questions and answers. But right before, I do want to mention to everyone that I do offer private one-on-one teaching and coaching and mentoring sessions in the evening time via Skype. So if you feel like, you know, some one-on-one time would help you, let me know. You know, I have an initial call or Skype call just to get an idea of, you know, how you're trading, what the issues are you're having, and then I'll put together something to try to get it straightened out for you. And I also record those. And so after the lesson's done, I send you a link to the recording, so you can always have that if you think, what did he say? And I can't remember, you can always go back and look at that. So, and then also, if you are finding this channel helpful in this live stream, the videos, you know, please do me a favor, hit the thumbs up. It does help with the rankings for Google. And, you know, I do want to grow this channel and help as many people as I can. So if you could hit the thumbs up or share it on social media, I would really, really appreciate it. So William says, hi, Greg. Based on your years of experience trading your strategies, which one strategy you believe to have the higher winning ratio? Well, now remember, William, just because something has a high win ratio does not necessarily mean it's a good trading strategy. You know, I hear ads on YouTube for something that has a 90% winning ratio, and it doesn't really, you can have a 90% win ratio and still lose money, because if you're having a high win ratio, that means you're making small little profits and making a lot of them. But back to your question, which strategy do you believe to have the higher winning ratio? Well, okay. Let me most of my strategies, like my win ratio currently for the year, and these are all my different strategies combined, about 70%, which is good. You know, it's really good. I think, you know, most swing trading methods, like, you know, V1, V2, something like that, entries, swing trading entries are probably in the 60 to 65%. But then I have, you know, the break under and break back over, the 100 or the 200. So it kind of moves things around. But let me show you something. And then he said, also, if you had to recommend one of your strategies as a novice trader, which one would you recommend? Okay, so interesting you asked me that, because earlier today, I thought, you know, if somebody did have one particular approach, like if I had to give somebody one particular approach and I could only give them one, what would it be? And it is probably this. Now, people think that they have to sit in front of their screens and trade all day to be good traders, and it certainly gives you experience, there's no doubt. But if you're only looking for results based, this approach is simply amazing. And it's based upon the 200-day moving average on the SPY, and it's based upon the last trading day of the month. So hopefully this will make sense. If to trade this system at the last day of the month, if you are not in a position and then the last day of the month rolls around and it goes from under the 200-day moving average back above the 200-day moving average, then you buy it. then you don't look at it for an entire month. You only look at it again the next month at the end of the month. If it is still above the 200-day moving average, you keep it. And if then the next month you look, and if it's still above the 200-day moving average, you keep it. Then let's say the month after that, on the last day of the month, it closes under the 200-day. On the last day of the month, it closes under the 200-day. Then you get out, and then you're flat. And then again, you look the next month, the next month at the end of the month, last day of the month, and if it's still under, you stay out. And then the next month, last day of the month, if it's over, you get back in. You follow? So let me show you the results of this. So this is based upon the SPY using the 200-day trade month end. Look at these results, folks. This is from 2000. Doing this 382% return, only a 20% drawdown. Buy and hold during the same period, only 195 with the 55% drawdown. Isn't that amazing? And you literally only have to look at this one day a month. And so if you're asking me if you had to recommend a strategy to a novice trader, which one would you recommend? There's not a lot of situations where you can mess this trading system up. You know, if you're trading every day, you can have mistakes and this and this. So if somebody's really novice, I would have to say this is what I would recommend. I mean, let's look at the numbers a little bit more. The win rate's 70%. It's unbelievable. It's 70%, and you only have to look once a month at your position, and you only have to take action once a month. So it's only had 10 trades. 7 have been winners, 3 have been losers. The average win has been 20.57. The average loss has been 5.82. So that's a 70% winning percentage with a 4-to-1 win to loss ratio. Isn't that amazing? You know, and if we look at the actual trades here, the first one 5.29, and then negative 5.82, and then you had all these big wins. And then currently, the last trade was on February 28th, 2019 for a 1.92% return. It's still in the trade, right? So if we go back to February 28th, 2019, what are we going to find? We're going to find it was the last day of the month. Let me take a look at that again. What was that? Yeah, February 28th. So yeah, that's the last day of the month. Do you see how the last day of January, it was not above the 200-day? So you didn't enter it. So the last day of the month on February, it was over. So you're going to keep that until we close under the 200-day on the last day of the month. So we're getting close. The last day of the month here is Friday. So if Friday we close under the 200-day, you're out of this system. And then you have to wait till the end of June to see whether or not it's back over or back under. So I know that was a little long-winded, William. Is that what you were looking for? Or you're looking for more of an active approach? But per your question, if you had to recommend a strategy to a novice trader, which one would it be? It would be this one, really the one I just showed you. But I know it's not that fun. It's not that exciting because you're not doing it much. If I were trading more of a active trader, what would I be looking for? I would be looking more for moving average crossover signals or bounces, close below, close back above major moving averages. All right, does anyone have any other questions, or do you want me to take a look at any stocks? I'd be happy to do so. Just let me know. Where did we end up? We ended up down 237 on the Dow, 29 on the NASDAQ, and 23 on the S&P. Big turnaround day. All right. Well, looks like we don't have any more questions. So, interesting day. Slightly negative for me today. Slightly red day. I'm actually very happy with this small loss based upon going into it quite light and then hitting some profit targets before the day really turned around. So, all right. A strategy one of yours you use daily. Just give me 1 second. My trading partner Katie is demanding she wants it. Come on, Katie. All right, for something I use daily, I would look for something similar to what we had on Etsy, where we moved up, we came back down, we had a V1, V2 entry with a higher low behind us. V1, V2 entries are probably my favorite entry, but you have to look at the context of the chart. I like to have a higher high and then a move back into value before I buy, and then having a higher low below me also. So yeah, V1, V2 entries, return to values with V1, V2 entries would probably be my favorite kind of day-to-day type of trading. I mean, the bounces and the closes below and back over the 200-day, those are good, but they don't happen a lot. So yeah, so a move up, a dip back down with the V1, V2 entry would be my kind of bread and butter trades. And those, I would imagine you're somewhere between 60-65% winning percentages. Okay, well, if that's it, I'm going to get out in the mountains and go hike. Thank you, everyone, for coming by today. I really do appreciate you spending your time, and I hope you find it helpful. And if you have any questions that you don't think of now that come to you later, feel free to email me. My email is in the description of this video, or you can also contact me on Twitter as well. So, okay, on the way out here, I need to... Great. I'm glad that helped, William. So on the way out here, we've got to play the legal disclaimer again. So thanks for coming by, everybody. Hope to see you tomorrow, and have a great rest of your day. Take care.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.